You talk about the wall of worry around Chinese equities has crumbled. Why is that, and to what extent and how long will that be sustained, do you think?
Good morning. Well, we've been very busy seeing a lot of companies, and I think the bottom line, that the message that the companies want to tell us is that they're much more nimble, they're more adaptive. So some of the wall of worries that the market has priced in very quickly could be a bit overdone. Whereas, as you mentioned earlier, we're seeing that companies are delivering growth at an accelerating pace. They're benefiting from the recovery dynamics, and some of them are even beating expectations.
Do you expect then the earnings strength to continue, or will you have to factor in a squeeze on margins?
I mean, I think that's a very good question, and it's what we're working very hard on. The backdrop, obviously, with the recovery is very positive for growth as always. But as you mentioned, there are these inflationary pressures and challenges that companies have to deal with. So we still think we go back to, the fundamentals of companies. So it's about pricing power. Do companies have that pricing power? Are they flexible? Are they able to mitigate some of these pockets of pressures that they're seeing that's affecting their business?
And Nicola, as you pointed out, it's a good problem to have. I mean, if you did have a drag on earnings, this is the type of drag that you want to see. I want to talk to you about short term, though, in terms of sentiment and the people that you talk to. Do you think sentiment is good enough to take advantage of fundamentally what's looking like a sound market?
Well, I mean, as we do see that liquidity is improving, so you could see that the market turnover and the A share as well as the Hong Kong markets are improving. So I think these are things that we monitor. We don't really know how to predict them, but we monitor, and we think that those things, as long as they continue to be positive, then sentiment should continue to be quite well supported.
Okay, and in terms of then your preference within the equity space, is it A over H? Is it one over the other? And within each of those, is it more value or is it more growth?
I think we don't discriminate between A and H. We invest in both asset classes.
Okay.
Obviously, right now we acknowledge that we're looking for companies that will benefit from the current cyclical recovery. But ultimately, we always overlay it with long-term structural drivers that we like, and then we focus on. And just to give you an example, on the consumer sector, the cyclical forces would be just this pent-up demand and savings, and as activities normalize, the services and upgrade demand will continue. But as I mentioned before, ultimately it's about the longer-term structural growth drivers in the consumption side. We really like, things that are that can capture the upgrade demand. We like the premiumization of products and better quality of life and services. So we still hone into companies who could deliver that pricing power.
Nicola, we just have some lines crossing. We knew that these talks were going to be happening between the US and China on the Phase 1 deal. We now have confirmation of that from the Chinese side, saying that China and the US, their trade negotiations did talk on the phone. The negotiations were constructive. They had constructive talks. These are lines coming through from China. Liu He, so he's the vice premier, and of course he led these trade negotiations with the Trump administration. He was partaking in this conversation with his US counterpart, Catherine Tai, from the USTR. So Liu and Tai had candid, constructive communications. These are the lines crossing now. We will continue to bring you up to speed on this developing story as and when we get it. Nicola, in terms of, we got the trade story, of course, but in terms of what's happening on the tech front, and we have this antitrust drive from regulators here, how are you looking at the upstream and downstream parts of the technology ecosystem, and where is your spotlight at this point?
Yeah, so as you rightly pointed out, the China tech sector extends beyond just internet. It also includes hardware, software, and data infrastructure stocks. So with the trade talks, that obviously has been the very central issue that has been out of the control of the companies because it's affected a lot of how they do business. But we still like the upstream right now because obviously we think that the cyclical demand recovery is very positive, but at the same time, you've got that long-term structural force of semiconductor going into, your autos, your computers, your supercomputers, et cetera. So I think that's where we see some positive catalysts on, and the same argument can be made with selective hardware and software companies as well. The internet platform, we in Barings, we definitely see companies based on target prices, and previously some of these target prices were reached, and the market's priced in quite a lot at a very sort of, they priced in quite a lot quite quickly, but we do think over the long term it is still where a lot of the very attractive growth generations lie, and so we continue to be constructive on the sector.
Okay, and as far as then, that's your overall buy list, companies that are trading at good value, obviously, good growth stories, pricing power, what have you. I want to complicate things a little bit further for you, but I know you have the answer to this. ESG, how do you then overlay that sort of picking mechanism over everything that you just mentioned there?
Yeah, I mean, we think ESG is very important for the Hong Kong, as an investor in the Hong Kong-China markets. It's actually always been part of our framework, but we formalized it by incorporating ESG into our target value calculation that I mentioned. We think it's very important part of, as we assess the value creation and the quality of these companies, and it's partly also an indicator of what good management is. So we do have a bottom-up target price, and for companies that deliver good ESG, we have a higher target price, and those that don't, we do penalize them.